Hey everybody, this is Ken Marsh the Fourth. Welcome to the video. Please, before we get started, read this risk disclaimer. If you need to, pause it. But in this video, we are going to be talking about what I promised a few days ago in Twitter, a video on how to trade if you have a daytime job. What we're going to be talking about is the USDJPY as an example on how to trade daily candles. Some people can't trade the London time frame. Of course, they have to sleep for work, and of course, they can't trade the U.S. session because they are at work. So this will help everyone with that. So stay tuned and enjoy the video. All right, everybody, welcome back. As promised, I'm going to talk about how you can enter trades on the daily time frame. And with this, we're going to start with the weekly. And what we're looking for is signs of manipulation. And whenever that happens, usually you can pretty much expect the market to be continuing in that direction, or the opposite direction. And we have two examples here on the weekly on USDJPY. First, we get this very bearish move down here, and it breaks this low here and this low. And once this happens, you get this big rejection back into the range. Now, we're not going to be trading this. What we're doing is allowing the market to tell us what direction that it's planning on going, or that they're planning to make the market move. So at this point here, we're just getting that information that we need with this little false breakout for liquidity, and then we're going to wait for the market to pull back. Now, if you see right here, this high also took out two previous highs, reaching for liquidity to move the market down, and actually so that they can accumulate orders to go long again. So when we see this, we're going to definitely be bullish in the market. So this is the weekly, and then again, we're going to come down here and we're going to take out another swing low here. And once we do that, that's when we're going to start looking for a reason to get in the market. So at this point, right now, we're going to switch the date to the daily candles. And before we do that, as you can see here, this is the next target area that we're going to be taking profit right here just above it. And let's go down to the daily, and I'm going to show you what we're going to do here. All right, so now here's that big explosive move up. We get a small pullback here, which you could probably have traded, but that's not what I was looking for. I was looking for market manipulation like I was showing you. We get that, then we get a rejection back in, and then we start moving down. Now, there's plenty of opportunity here to trade day-to-day trade or short-term swing trade, as well as here. But what we're going to show you today is how to trade on the daily time frame so that you're able to do this while you work full time, because a lot of people don't have time to look at the charts every day or multiple times a day. This gives you a way to trade and still gain the profits you need every month to grow your account and just build it up for maybe retirement or until you're able to be able to trade full time. So what we're looking at now is where we get this pullback, and we're looking for a swing low to form here, and then we need to see a break of a recent swing low or swing high to be able to look for a way to enter into this trade. So we get that right here on this bar, this candle here. It comes up, takes out the high, and right here is going to be your entry. So let me draw the fib. You're going to draw from here to here, right there. And what we're looking for is a pullback right into this. As you know, if you follow me on YouTube or if you know anything about me, I like to trade Fibonacci, and I like to trade between the 62 and the 79%. And we get that move right down into the 70.5, which was where I typically like to trade between the 62 and the 70. I'll put a buy limit here, or I will enter in the market live. But in this case, what we're looking for is a way to trade where you don't have to be in front of the screens all the time. You can come home from work if you work a 9 to 5 and look at the markets and see what's going on. Once you start seeing this move heading towards this, you're going to be anticipating a break up. Once we get that, that's when you would set, and starts moving down, that's when you would set a buy limit right in between here, wherever you'd like. You can do it at the 62% level. Just keep in mind of your spread. And once you enter, of course, your stop loss is going to be below here, either right at the 100% or just below it when you add your spread. And then we're just going to look for the market to move up. And in this case, it moves very quickly up, closes, and then you get a little bit of sideways action for a few days, but you don't get anywhere near your stop loss. Like I said, most of the time you can move your stop loss up if you'd like. Like after this big move happens here and you get into this consolidation area, you can move your stop up to limit your risk, either to break even. I would actually consider just keeping it below this here, so that you give yourself room so you don't get stopped out. But again, it's pretty much you just let the trade run. You check it once a day just to make sure everything's okay. You can even maybe check it during lunch, just to make sure you're still in it, or if you need to move your stop loss if you get a big move up. In this case, we've just taken out this high, and we're waiting to see what happens at the end of this day. But at this point, if this closes here or above here, for sure, I would be moving my stop here. I'm not in this trade, by the way, but my fund manager is in this trade, so I would be moving my stop loss somewhere below here. Once you do that, and just let that trade run, and you're already locking in profit at this point. And that's the whole thing, like I talk about in each video, is risk management and trade management. You could leave your stop here, which is fine. There's nothing wrong with that. But if you get a big move down in here, you're going to be losing all that profit you just gained. So you can lock it in, protect it. Sometimes you do come out here, and it comes down here, and it takes you out for a small profit, then it continues up. It happens. It's okay. The main point is that we don't try to go for home runs 24/7. We're just looking to try to take advantage of when these moves do happen. Usually they happen pretty quickly anyway, and they just move up. You might get a little pullback up in this area once we break this high, but that's okay. That's why you want to keep your stop loss low. But like I said, if it comes out, takes you out, that's fine. The whole point is we're not focusing on our profit. We're focusing on our drawdown. We don't want to have a lot of drawdown. We want to maintain that so that when we do get the big explosive moves up and you get the big, huge wins, you will be making large profits. That's where your equity curve starts to go higher. All right, so let me show you where your target area would be. And of course, what we're going to do is we're going to just reverse this fib up to here. Whoops, made a new one again. Let me get rid of that. We're going to reverse this fib right up to there, and whoops, right there. Move this down here. And the reason why we're doing this is just to see if we could take profit before the swing at the 200% level. In this case, we would be wanting to take profit just before this high. And the reason for that is I put this first when it comes to targets. Then this would be secondary, especially in this case. Like this data feed is from Awanda. I use a different broker account, and my data feed is different. So this swing, it can be slightly manipulated, and so I like to take profit just a little bit below, just to make sure I lock it in before anything happens. And then you take profit there, and you may get a nice trade. Let me show you what we would be. Oh, and by the way, you can take first profit off at the 100% level here, or slightly above it, and then at that point you can let the rest run and move your stop loss accordingly below the swings to lock in more profits. So let's draw out, whoops, what we would make on this trade. So again, your entry is right here, and this actually would be where I would enter, right around the 70. So we will place this here. And then, of course, now I can get rid of this. All right. We're going to move the stop loss up to here. And then we're going to move this all the way up. We're going to go ahead and go to the swing high just for simplicity's sake. And all right. So look at here. Obviously, you can see that you're going to win a lot more than what you're risking. And again, the secret is to limit this risk as quick as possible. That way that you can make a large gain with no risk. And then if you do the market end up just shooting down here and taking you out, you take a small loss, nothing major. But you can see here, we got almost 6-to-1 on this trade if you took profit here. As you can see still, we're still waiting for the market to get up here. So you would still be in this trade. And you could just be moving your stop up accordingly. And you would be catching 333 pips at this target, which is awesome. I mean, that's what you want to see. Again, like I said, if you take a loss, I've talked about this in other videos, it's okay, because when you do win these wins, you're going to more than make up for your losses. You take multiple losses before you catch these big moves. You don't have to catch these big moves all the time. You could be stopped out here or stopped out here for some profit, because you're already taking, and if you're already taking profit off here, everything else is just really a bonus. All these little wins you get make up for what losses you have, and it keeps your equity curves nice and smooth as it's going up. And then when you get these big wins, that's when the equity curve jumps up. Then you got more buffer for some small losses before you, and maybe some smoothness while you're taking small wins until you get the big win again. You only need a couple of these a month to grow your account very quickly. Like I said, I like to target 3% a week, but I'm trying to average between 10 to 12% a month or higher, of course. And you can see this. So you see this live right now. You can watch this on your own and just see if we make it to the targets, but I'm pretty sure we will. Worst case scenario, we come up, a little bit further, and then we continue down, because as you can see, it looks like a downtrend. But when things look like a downtrend, that's usually when they manipulate it and then they continue up, as you saw earlier in the video. So that's what I've got for you for trading daily candles. Of course, we'll have more examples on trading on the daily time frame for those that are busy. That way you don't have to look at the charts but once a day or just a few times a week. You just need to give yourself time once a week to really look at the markets that you are interested in trading and analyzing them, and just waiting for the right setups. So let me clear this out, delete that. So we're going to go back to the weekly. When it loads, there it goes. So again, you're just going to analyze the weekly time frame. And you can do this, of course, on the weekend after the Friday close. And just look at the markets, take a little time just to see if you see manipulation. And of course, it takes time to read the markets, and I understand that. That's why I put all these multiple trade strategy examples on my YouTube channel, so that it trains you to look for manipulation and to see it with your eyes. That way you can develop a habit to look at these. When I look at this, it only takes me a few seconds to see what's going on. We look like we're going, if you look right here, we're moving down, pull up, then we don't break this low, which gives people the false hope of that we're going to be moving higher. Then we get a fake out just above the swing, just a little bit right here, and then we move lower. And that traps a lot of traders. This traps traders up, this traps traders down. It's just a never-ending battle. And then once they finally break this low, everyone thinks it's going to continue lower. They get in, then it comes up, it breaks this high here, and then we get this move here. That's just, and then now we get a small pullback, and then we get a break and a manipulation here. That's when we start to look for bullish setups. And a lot of people think that you should be seeing this all the time to be able to trade with the trends, and that's not always the case, because this is sideways, but when you go to the monthly, it's just a pullback. So just remember that you're going to have to look at multiple time frames to get the whole picture. You need to look at the macro view of each pair and get used to the pairs that you want to trade. I don't suggest trading every pair. It's very, very hard to keep up with all that. Just pick a small basket of pairs that you want to focus on. You can go through all the pairs, look for pairs that are trending well on the higher time frames that look like you get a good directional bias. Then you go down to the weekly and see if that direction is also showing on the weekly. Then you can pick your best ideas from there and go down to the daily time frames and focus on those. Wait for the right setups and take them. I use Fibonacci. You don't have to use Fibonacci. There's multiple ways you can trade. I like to use Fibonacci because I really feel like it gives you an advantage, because you're always going to get a lower entry, so you're going to get a better price, which to me is a higher probability trade. If you're wrong, you're going to have a very small risk to reward, so that when you're wrong, you're taking small losses. And again, when you're right, or when you end up winning small, you're making up for the losses. And then, of course, if you do win your full target, you're going to make up for everything else. So that's my example with the USDJPY. I'm going to go ahead and stop the video at this point, mainly because I got another video. I got a one-on-one webinar with a gentleman in our group, which I will be recording as well, and I'm going to be going over the normal strategy on the 1 hour time frame. So stay tuned for that. We'll be posting that hopefully later today. Remember, all this information that you're getting is completely free and will help everyone out if you just focus, come up with a strategy. I have a strategy that I use, but it doesn't have to be, you don't have to use that. The main thing you're learning with me is price action and how it works. Thinking like a bank instead of thinking like a retail trader. That way you can predict high probability areas to take a trade, and you can use a strategy to gain an edge in the market to start making profit. Again, if you like what you see with me and you want to learn more and you want to get more detail, I have a personal group in Imarketslive. If you decide to join Imarketslive and you want to get the extra benefits you're going to get with me, you're going to get one-on-one training, just like what you will be seeing soon. You also get my unidentified attention when I am available, because I'm a very busy person. I'll be going. I share trade ideas. I share screenshots of specific ideas and analysis that I have. That way, people can take advantage of that. As you can see here, we're still reaching for this target. So if you get an idea on the lower time frame to enter this on a pullback, then you can still trade up to this area. So this is actually a live possibility for you to make money right now. Of course, when you've read my risk disclaimer, I'm not responsible for your losses or your wins. That is on you. You're taking your own risk. What I want you to do is I want you to learn how to trade through these videos. I want you to use a demo account so that you can get used to it. You don't want to throw away your money just to learn how to trade. Use a demo account. Be patient. Learn. Once you learn and you start gaining an edge and you start making profit, then take that hard-earned money that you have in the savings or however you want to get that money, and then trade live, and make sure that you're going to be making money. Trading is not a instantaneous get rich lotto type thing. This is not gambling. This is a way of life. This is an actual career that you can have. You can be trading your own money for wealth. You can be trading your own money during the day to live, or you can be trading someone else's money or working for someone else as a trader. So just remember that and keep that in mind. Like I said, I am a part of Imarketslive. I do education with my group. And there is a video. The first video shares my story with Imarketslive. And I also share a presentation of all all the benefits you get when you join. So you're not just joining to get more information from me. You'd be joining to get great tools, even more education, multiple educators through Imarketslive. It's a very low cost for the amount of money that you could possibly make. Again, previous profits don't. Hold on one second. Sorry, guys. Oh, anyways, sorry about that. Previous profits don't prove. I'm sorry, I'm having technical difficulties with my computer. Anyways, it's in the risk disclaimer. Sorry about that. My computer was acting really weird. It's in the risk disclaimer. It's on the bottom. You know the drill. Just because you see our results doesn't mean that's always going to happen. You're going to take losses. That's normal. If you use the right risk management, you're not going to blow your account. You're not going to lose a bunch of money. You're going to control your drawdown. All right. With all that said, I appreciate everybody that's watching. Don't forget to subscribe so that you'll get more. You'll subscribe and click the little bell. That way, every time I upload a video, you will be notified so you can watch it. Please like if you like this video, and comment below if you need if you have any questions or anything like that. And I will try to respond as soon as possible. Again, like I said, I'm very, very busy, but I do respond to everyone when I get a chance to. So feel free to do that. And don't forget to watch all the other videos. I have a lot of other trade examples. And of course, I will have a lot more to come. All right. Thank you very much. And good luck and good trading.
I've been watching you.